Welcome. On behalf of ACT, I'd like to thank the OIX, a 2018 ACT Emerald sponsor, for hosting and sponsoring today's webcast entitled Leveraging Enterprise Software and Data to Operationalize the Hidden Financial Asset, Tax Credits and Incentives. I am Al Bradley. I am the Director of Tax Operations at Air Liquide and Airgas, and I'm also the current President of ACT. ACT, or the Association for Computers and Taxation, is a nonprofit educational organization whose focus for 37 years has been education relating to tax and technology for corporate tax and technology professionals. ACT is the preeminent association for tax professionals interested in advancing operational effectiveness through the use of technology. ACT events are designed to provide a forum for tax professionals to stay abreast of trends in technology and to learn best practices that will help them reach new levels of operational excellence. The educational opportunities ACT offers our members include bi-monthly webinars such as this one, electronic newsletters, conferences, publications such as benchmarking surveys, and much more. Before we begin today's webinar, there are a few administrative items we'd like to cover. If you have a question or concern during the session, please enter your question in the bottom right-hand chat box. We will answer as many questions as possible through the presentation. Be sure to participate in all of the polling questions throughout the webinar in order to receive your CPE. Additionally, we ask that you exit out of all other applications that are currently running on your computer to optimize today's viewing of the webcast. Today's slides will be available on the ACT website within the next few days. Lines are muted. And again, please use the chat feature to ask questions. With that, I'd like to introduce our presenters for today's webinar. Our presenters today are Danny Beagle and Jonathan Jenkins. Danny was a member of the New York Stock Exchange for 15 years, and following the New York Stock Exchange, Danny spent the last 15 years in entertainment finance. He's also an adjunct professor at NYU Stern School of Business, teaching a graduate level course on entertainment finance. And he's a member of the Producers Guild of America, the British Academy of Film and Television, the American Film Institute, the Creative Coalition, and he graduated from Brandeis University in 1987 with a degree in economics. Jonathan graduated with a bachelor's in accounting from the University of Utah, and he also has his Juris Doctorate from Syracuse University, College of Law. Jonathan spent several years with PricewaterhouseCoopers in New York City. Following PwC, Jonathan spent several years with NBC Universal, and Jonathan has spent his last 12 years with CBS Corporation, where he currently serves as the Vice President Tax Counsel. I would now like to turn the presentation over to Danny.
Hello, Al. Thank you so much for the introduction and for the opportunity, and appreciate all the attendees who are participating in today's webinar, and also want to thank you, Jonathan, for joining me today.
Happy to be here.
Great. So what we'd like to do, again, as Al mentioned, really encourage any questions to be sent through the chat feature, as well as answering the polling questions that you'll see throughout today's webinar. Today is a really unique environment in terms of government policy and their use of economic development tools known as tax credits and incentives. Today, government has to behave differently with respect to getting the type of behavior it is seeking out of business, and using credits and incentives is really a very important policy tool, and it's only growing in scale. And as a result of that, I founded the OIX 6 years ago as a way to create technology and a platform to address this growing asset class, which has been increasing not just in the United States, but it's an international asset that governments are leveraging as they compete for innovation and for the best jobs within its borders.
Yeah, absolutely. So, certainly that's what we noticed when I approached our finance people 10 years ago, started talking to them about some of the incentives that were being offered around the world. Back then, of course, in my industry, the entertainment industry, incentives are offered related to the production of films, production of TV shows. A lot of jurisdictions want to lure a production there. Canada was doing a good job of it. And then the states took off. A lot of states started offering the same thing, and it really began to take off at that point.
Yeah, and that's, I think, a great example of where jurisdictions on a global level compete, again, for quality jobs, permanent jobs, infrastructure, and with respect to entertainment and media incentives, specifically to your point, I think it was a result in the early 2000s of a successful lobby on behalf of the industry to combat the loss of jobs overseas. I think it was typified as runaway production, where businesses were following the money, following the incentives, because there were incentives around the world that really have begun to be a material asset.
Yeah, that's absolutely true. The productions were going to Canada. California was being hit the hardest, and other states saw that as an opportunity to compete for business and to bring jobs into their state that you wouldn't normally associate with the entertainment industry. We saw that places like New Mexico and Louisiana.
Yeah, and we think today, and again throughout this conversation, it's going to be wonderful, Jonathan, to hear some of your real-life experiences at the CBS Corporation as it relates to today's subject, as we move through the a high-level overview of what we're going to cover, and more importantly about how technology today is critical in terms of maximizing that. And we at the OIX, what's interesting with respect to how we talk to our clients and how they in the past has maybe perceived credits and incentives as more of a tactical asset, where today it's really a strategic asset. And I know that in a lot of the clients that we talk to on a daily basis, one client in particular years ago had mentioned, 5 years ago, we never had a credit or incentive. It wasn't even on our radar. Whereas today, this particular company is a retailer, wouldn't even open a new store, move to a new location, create a new hire without examining the myriad of potential credits and incentives available to them.
Yeah, that's what's happened not only at CBS, but I think among the entertainment industry as a whole. The finance guy I talked to 10 years ago about the incentives, we started talking about them. We talked a little bit about what was available, and his response at the time was, very casual. It was, well, it'd be nice if we happened to go to a location that offered one of those, and maybe we could get it. But as costs of production rise, I mean, it's across all industries. Productions, costs are rising. Your competitors are doing it. You have to take advantage of these things. And so it's the same situation with us as the example you just mentioned, where all productions, it's one of the decisions that are made, not only whether it fits some sort of creative aspect, something that fits with our talent, but but how much can we save in production costs? And actually, the creative people on the production are actually excited about it as well, because to a certain degree, they feel like it gives them more money to spend on their art. And so it's become a huge factor in all our decisions.
Yeah, and I think even going back to some of the statements that we hear from our clients, and in the previous one I gave around retail, is that today companies are, again, as a strategic asset, are relying on the economic benefits of these incentive programs in order for them to compete and win on the margin, because every dollar counts, and certainly as their competitors are doing so, it really, again, just increases the need to really take hold of the asset.
Yeah. So. Yeah, I think that's absolutely true. I think and it's amazing how fast, once you realize that there might be some incentives out there for you, and you begin doing them, become better at them, how they can actually begin to scale up for your business.
Yeah, and in particular, in instances where a variety of different credits can be stacked, right, or accumulated together, whether they be in an industry where a particular company may be eligible for a credit, a federal credit, a state credit, a local credit, and additional incentives based around varying qualified expenditures within their budgets, relating even down to local labor versus outside labor and things of that nature, right?
Yeah.
So I think we'd really love to hear, Jonathan, some of your perspective around, why it really matters, particularly in your department and at the CBS Corporation, in terms of why it's so important to take control of this asset, and love to hear some of your perspective on how the evolution within the CBS Corporation, again, as one example, how has that evolved for you folks over time with respect to how are you leveraging technology? And we'll get deeper into specific use cases around technology, but love to hear some of your thoughts around where you were before, potentially where you are today.
Yeah, absolutely. As we started exploring the incentives and credits more fully, one of the first things you realize is that they're not always easy to get. There's work that's involved in getting them, and so there's a certain amount of management and a time aspect to it that requires you to keep an eye on it as it goes through a certain process. And our credits, there's lots of different groups within our company that are involved because it does relate to the production of a TV show or a movie. And so you've got production people, production finance people, you've got tax people involved, you've got studio accounting people, and of course, in the case of many of these credits that we use, which are ultimately put on a tax return, we've got the SALT group within the tax department that has to be involved at some point. So with all these groups having a stake in the credits and having an interest in following them, the thing that we quickly realized, we were managing them all on spreadsheets. And at first, when had a few $1 million, a spreadsheet was fine. There wasn't a lot to coordinate. But then as they began to build, to scale up, and you get to a point when you're managing a few $100 million worth of credits, you realize the inadequacies of having just a spreadsheet in somebody's computer. It just doesn't cut it any longer. We were finding that, various groups had their own versions of a spreadsheet, and they would try to keep it updated as they got the other group's spreadsheet. And it was a constant, a constant pressure to keep that updated so that when they needed information, they had it. We actually found that one group maintained multiple spreadsheets because they wanted one spreadsheet for one purpose, another spreadsheet for another purpose, and they actually had somebody in their group who spent half her day every day on keeping each of the various spreadsheets updated because we had so many credits going on.
So in that case, you may have run not only risk around human error, formula error, input error, not to mention all the different obstacles and pain points that you face just with respect to planning and forecasting. Would you agree?
Yeah, that's absolutely true. The thing that we found is that it was nearly impossible to keep those things all updated at the same time. You might have a meeting where everybody's on the same page, but as the next day comes along or the next week comes along, and the group that's closest to the credits that are producing them, they would have updates, but then the updates didn't get communicated, and the other groups would be out of date. And so what we found eventually is that when decision makers, the SALT group who's getting ready to make estimated payments, and they would ask about what credits we'd have, you could tell there was some wariness in their voice about, is this accurate? Are we up to date? And then the forecasting group too, they do a forecast on some of these things, and they'd realize that maybe they weren't on the same page as another department within the company. And those things led to bad answers and some growing pains, and we quickly realized that this wasn't really the best way to go about it, managing on these multiple spreadsheets.
Right, and I think to a point also that you made, that as this asset class really grew in its materiality, right, really forcing the need to take better control of the asset, to mitigate for either just some of the inefficiencies or worse perhaps, and again, as we talk over the next 20, 30 minutes or so, we're excited to share with our audience and listeners today about specific experiences. But so around the growth of the materiality of this asset and why it becomes more and more important to leverage best-in-class technology to better take control of it, to compete more and on the margins. One interesting question, and we, again, here at the OIX, as we talk to, hundreds of companies where the use and the thinking about credits and incentives as a strategic asset, and because it's become more material, when you think about the folks in the tax department today, what a critical role they are now playing in so many aspects of corporate planning, financing, location or relocation decisions. And again, we hear this every day. Let me ask you a question, Jonathan. How many employees are there at the CBS Corporation?
We probably have 13, maybe 14,000.
Yeah. And how many people within that organization are the makeup of the experts in the credits and incentives group out of that 13, 14,000?
There's probably maybe 2 full-time and a couple who add to that. So I'd say less than 5.
Right. So out of an organization of 13, 14,000, you've got 2 to 5 people who are really experts in this material asset that's growing, that helps companies compete to win. And again, it'll often make the decision, go, no go, if you look at any industry. So really exciting time, I guess, today to be in the tax department where those folks, once you now couple existing technology, and we'll talk later about emerging technologies, but just a couple existing technologies today, how important those 2 to 5 people are in such a large organization.
Yeah, absolutely. I mean, it's not enough, but you can't necessarily get headcount. And so having the right technology, actually, it's like having more headcount because it manages a process that we were having a lot of difficulty with before.
Well, that's a really interesting way of looking at it. So to you, if I'm understanding, to you, modern technology is as if replaces the need for or frees people up to do more important things, but it adds to your team.
Yeah, it absolutely does. I had mentioned to you previously once about a story in terms of trying to put a report together for my boss. He wanted to know, in terms of the tax credits that we got, what was used to offset tax, what did we get back in a cash refund, and what we were able to sell, because he was trying to figure out, he wanted to make a report to the CFO. And honestly, from the information that I had at the time on the spreadsheets, it took me about a week to probably pull all that information together from the various sources. It was not an easy task.
Yeah, and so that brings us to I think a really interesting question. And again, we'd like to hear your real world experience, because again, we think that there are companies that have different opportunities today with respect to the technology that they must use to take better control of this asset, and for all the reasons we had just previously talked about. Forecasting and financial decisions. But as we see it, and again, love to hear how you folks have thought about it around, what are companies using today? So, we see in our universe at the OIX, companies using either a combination of fragmented and bifurcated systems that they're, recognizing even that a spreadsheet alone isn't going to cut it. So they're now figuring out ways how to plug the gap with using different types of systems. We're also seeing companies who have recognizes that even those fragmented systems aren't going to cut it. So they've gone ahead and tried to build their own or built their own. And we often hear that those businesses who have built their own are struggling from a few perspectives. Number one, being just suffering from a lack of innovation. Some of these systems were built years ago, or the cost, the internal cost it requires to maintain these systems, right? Yeah. So, and then of course that brings us to modern solutions today that can solve a lot of these problems, and let alone plug into existing and internal systems. So, what was your experience around the technology approach that the CBS Corporation and/or some of your colleagues in the industry? What are your thoughts on that?
Yeah, the head of the CBS tax department, a guy named Rich Jones, has a mantra that he says all the time, and if you know him, you've heard it before. It's this PPT concept. It's people, process, and technology, and he believes that if you have good people and good processes and good technology, those 3 things together will lead to success. And it became easy for us to realize that our process and our technology was not good on this. But the difficulty was is that there was really not a lot well known out there that we could go out. Obviously, you can't go and buy something off the shelf. I personally actually considered trying to build a database. Not that I know how to do it, but I mean, who's got time for that? And then you've heard, I hear from colleagues around the industry, as you mentioned, who've tried to grow some their own systems, their own internal IT people, but without really having sort of an understanding of the tax credit and incentive area. It's hard to build something from scratch, I think, personally. I think it's tough. And so as the head of our department was looking for something new, he realized that the best option was to find an existing technology like the OIX that, as he calls it world class. He loves you. And when it was presented, it was easy to see that it was a great answer from where we were coming from.
That's what, I've had the pleasure of spending quite a bit of time with Rich, and I think that one of the things that you folks recognized early on, and I think I talked about this just a minute ago about homegrown solutions, is that as a technology provider and across any type of application, the idea of constant innovation, whereby taking collective learnings from all customers of an enterprise company, again, whether it be the OIX or any other type of enterprise solution, taking the collective learnings and the feedback and hearing ideas on specific points of pain and then addressing those. So again, that's something we pride ourselves on. And again, like other enterprise platforms, is to continually innovate the product. So for our listeners and attendees, this brings us to our first polling question, and we really encourage you to you'll see a pop-up on your screen in a moment, and we encourage you to answer this question, and then we will so we'll give this a few seconds or half a minute or so for people to respond to this question, and we'll all see the results live on the screen. So we'll give this just a minute. So I think we're about to cue up the Jeopardy theme while we're waiting for this.
All right, I've given it 35 seconds to find the phone.
Okay, so interesting to see some of the breakdown and distribution, and again, when we provide the slide deck that'll be available on the ACT website as well as the OIX website, we'll include some of these metrics so folks can see that. So I guess from I guess Jonathan, your perspective, again, you folks lived it. Seeing here that the majority of respondents are using bifurcated solutions, so interesting to see how our audience is approaching this particular polling question. Okay, now in addition to the around challenges that companies face today, and again, we've talked about this quite a couple of times, that again, this is a merging and quickly growing asset that companies must pay attention to. But on top of that, there are certain, of course, challenges that surround this, upcoming regulation being one of them, and love to hear some of your thoughts on some of these concepts.
Yeah, it's interesting because as you're working on the credits and incentives, you realize, again, once you start hitting a certain scale and the numbers start to become very large, lots of people begin to be interested in them. And in our case, it became everything from, pressure from internal audit, making sure that things were done in a proper manner and according to, company standards and policies. In the entertainment industry, we often have co-production partners whose, financial impact is dependent upon the credits and receiving the credits. State tax auditors might question them and want to see, backup. And of course, then if you're a public company, and I guess even a private company to a certain degree, you've got duties to the owners and the shareholders. And these things have to be watched over. And those are all pressures that are important to people who are managing these. Again, especially when they start to gain size and get to be really big. Because like I said before, when you're only dealing with a few $1 million, that's one thing. But when you're dealing with $100 million, $300 million, $600 million worth of
billion
credits and
plus
incentives.
when you look at,
and it can exceed $1 billion plus in credits and incentives. And when you think of the scope and the magnitude of that, and that's why, and even a good sized company like ours, the CFO wants to know what's going on with the credits and incentives. And it's very important that what they're getting is accurate information, especially when you're talking about, government regulators, industry regulators, auditors. Accuracy is key.
Yeah, and interesting around, CFOs. CFOs don't like surprises, do they, Jonathan? Whether they're positive or negative.
No, they definitely don't like surprises, and they don't like it when you don't have the answer. They want to know what they want to know when they want to know it, and if you don't have the answers for them, you're not going to look good. Yeah,
and I'll share just a quick story. Is talking to a client recently who's the CFO of a Fortune 100 company, and she told me a story where one of the people in their tax department came into her office and said, "Hey, I got some news. We're going to have an extra $20 million coming in this quarter from an incentive that we didn't properly forecast for. But hey, isn't that great news?" And she said, "You're fired." All right? Because CFOs don't like surprises, positive or negative. In this case, she was sharing with us that she had passed on other opportunities, not knowing if she had this capital coming in on innovation, on expansion, on potential acquisition. So CFOs don't like surprises, again, positive or negative.
Yeah,
so.
and another thing that CFOs don't like is if they're getting conflicting messages. If your forecasting group is forecasting one thing and your tax department is forecasting another thing, all related to the same credits, that's not a good look.
Yeah, and I guess that's a good segue when you talk about corporations that have multiple business units across either with wide jurisdictional footprints, U.S., international, et cetera. I guess then the importance around grabbing hold of the asset that can really only be covered through technology. And again, as we saw in the previous polling question, that it looks like a lot of our audience is that they're using some type of technology or another. But I guess, in your experience, how does that problem grow in scale as it results to a company like the CBS Corporation with multiple business units and for that need?
Yeah, staying in sync was difficult, as I've mentioned. The various groups that are going on with, if you're managing 10 credits, it's one thing. When you're managing a credit on 100 different productions, that's another thing, because there's a whole process in getting the credit. There's the communication between the groups. We've mentioned the forecasting, the need for forecasting, and all this boils down to cash. And I don't know a company on earth that doesn't care about managing its cash. They want to know, what they're getting and when they're getting it, and it's a big deal. And so, staying in sync with each other is key, and we found it, very difficult. When you're talking, in some cases you have so many productions and so many incentives, sometimes you're having trouble remembering, like, okay, well, which incentive was that? Which state was that in? And remembering, various aspects of it. And
right.
So it became very difficult.
And to your point, not just what state or jurisdiction it is, but what was the program specifically that produced the incentive. So
yeah.
Not enough to just say, hey, we generated an incentive in the state of Illinois, but it's which program, and there may have been multiple programs.
Yeah, multiple programs.
So getting specific and granular around the program, again, because you folks are reliant on that information, again, from a reporting standpoint, a regulatory compliance standpoint. So,
yeah, keeping track of the steps involved from beginning to end. There's so much there, and trying to have all that in one place, we just didn't have it, and we definitely knew that we needed something better.
Yeah.
To manage.
And again, talking about a large organization with multiple business units, how are you folks thinking about the fact that you may have some business units or subsidiaries that are generating a credit or incentive where you have other units that have a liability, or even the parent could utilize the credit? How in the past and maybe today did you guys think about how you're going to maximize the value of that incentive, both for the business unit who's generating, they'll get a bigger bang for the buck, and for the division or business unit with the liability that could enjoy the benefit of that incentive? How did you guys think about that maybe before and after?
Yeah, absolutely. So in our industry, different credits are monetized in different ways, and like you're alluding to, some credits they can only be used to offset tax, whereas other credits might be able to be used to offset tax, might be able to get a refund, or you might be able to sell it at a discount, and all of them have sort of a different answer. Mm-hmm. And so, and you're right, when certain divisions are making money and other divisions are creating credits, the division that's creating the credits doesn't necessarily know of the division that's paying tax. And so what would happen is, they're thinking about doing a movie in a certain location, and ideally the best answer is if we can use it internally to offset 100% of our tax liability. That was always better than trying to sell it at a discount. And so they call me, and then I'd call one of our SALT group, and we try to track down the right answer, and they go to one of their recent estimates and see what we were projecting for tax liability, and then we'd go back. And then they go back to their group and try to make decisions based on that. And they might come back again and ask about another jurisdiction, and the same thing would happen over and over again. It was not very efficient, but and that was before OIX. But now with OIX, we have the feature of being able to put in some projected tax liabilities in there, and the group has the ability to be able to just open up on its own and go to the state and see what we're projecting as tax liability. And they can make some decisions on their own based on projections, and it's a much cleaner process.
So from the perspective of the CBS Corporation, and again other large organizations we talk to, particularly those with large and multiple business units, without technology and regardless of what application folks decide to approach, a lot of this stuff was impossible just to be in sync, and especially, and I know we talked about this in the past, the visibility at the parent across all of its business units and operations is just critical.
Yeah, that was a complaint I got often from my colleagues in New York who needed this information to make decisions that they didn't feel like they had visibility in all cases, and we would try to do all we could, but it was so much to manage.
Well, that brings us to I think our next polling question, which is. Love to hear from the recipient, listeners on this webinar, and just in terms of how you folks look at this particular issue around multiple business units. So we'll give this a few seconds and see as the responses to the polling questions are coming in. Okay, so in the spirit of moving on in time, this is interestingly to see the responses here again, and we will publish the results of these questions on the deck that we'll provide on ACT's website as well as the OIX website. But interesting to see the distribution there. So, okay, in terms of, we talked a little bit about compliance and upcoming regulation, but really the importance of staying in compliance. And again, there's a big distinction, I think, between credits that have maybe a very short compliance window versus those credits that have a very long compliance window. And for those types of incentives where, companies really need to understand the financial impact on that, hence new regulation that's being deliberated and its financial impact on the company, and how shareholders really need to understand what the impact could be, particularly on a credit that has, a potentially 5, 10, 20, 30-year compliance window where there is the possibility of a recapture or clawback, that could happen on a 10-year credit, could happen in the 9th year. So I think around compliance, both current and on the horizon, again, technology from your perspective, Jonathan, how that's helping you folks.
Yeah, I think that, whether your organization, you're the one that needs to worry about the various, government regulations or industry regulations, or whatever it might be. And if it's not you, there's somebody in your organization that cares about that. And I think, sometimes the biggest fear people have is the unknown. And so really to be able to address the unknown and make sure that it's known to them, that they can have some degree of comfort, that they're, abiding by all regulations that might exist for them. And in our case, we even have, as I mentioned before, we have co-productions and we have outside parties who care about this. And there are contractual, obligations that we have to fulfill. And we have to, and they monitor and they ask and they want to know what's going on with these things. And so, as I've talked before, not knowing the answer, not knowing where you are is bad. But visibility, clarity is good, accuracy, all this is good. And when you have a platform that can be shared abroad across lots of divisions, lots of people, and they have information at their fingertips, and they don't have to call somebody and wait for a response or wait for that person to put a report together. It gives a lot of comfort to people who are concerned about managing risk and managing this type of thing.
Yeah, and as we started the discussion today about the importance of these economic development tools utilized by government in order to compete on a global basis, and so we certainly have a thesis that, and again, hence why new regulation and reporting and disclosures are being discussed at various levels of government, is I think when government sees the results, the financial impact of these programs, government can fine-tune this relationship between policy and business, can fine-tune these incentive programs to really maximize its value. And so hence the need for, government themselves to, really possess the best-in-class and modern-day technology. So, we've talked a lot about forecasting and cash management, and we've also talked about, I think, why, again, when you look at organizations that have, tens or hundreds of thousands of employees and a handful of folks that really are the experts on this important asset, and how they've become just so important in decision-making and financial planning, really empowered. It's a new role in a new day and age. And why today, for any company to lack some of these basic tools that, again, only modern technology can provide, I think there's an opportunity really for the tax department, particularly those in the credits and incentives group, to really become a formidable part of decision making.
Yeah, I think that's true. I think one of the greatest things that we realized early on when implementing the technology, and I remember having a division CFO, sort of the light bulb go on one day when she realized that we were all working off of the same database, the same pieces of information, and we weren't working off multiple spreadsheets with different pieces of information. And if all the information in the one place was accurate, you could get all sorts of reports out, all sorts of output to report on whatever you needed or getting any kind of information you needed. And so that ability to have one place with all the accurate information was a huge thing. And then the ability for people, across several different divisions that needed access to it, that they could have access to it, is a huge time saver.
Yeah, you made a comment earlier that you had to generate a report, which took you a week. How long does that take you today with the technology you now have? That same report, it took you a week. What would it take you today?
Yeah, I mean, and I can have that report canned in some respects and just go out and literally pull it up and print it out. And then, of course, there's lots of reports that are already built in that allow me to go in and do, you know, we use all kinds of forecasting and analytics in the system, you know, to look and see where we are on various things.
So you mean in the OIX?
In the OIX,
so you created essentially just your very customized library of different reports, and then anytime you want information or anyone in the organization needs information, in the past it might have taken a week. Today it's a press of a button.
That's right, and even in some of the dashboard aspects of the system, you can just go in there and see certain things that are just there. I mean, you can have it within seconds.
Yeah, yeah, and so, you know, we certainly talk about the importance of how this is impacting you and your very small group on a daily basis, and I guess solving for real problems. Not to mention just the improved efficiency, but the mitigation or elimination of certain risks in the past in terms of you know, what technology has done for your organization.
Yeah. I talked earlier about, you know, if the CFO asks and you don't have the answer, or if the answer that you have is not consistent with the answer that another division is reporting related to the same tax credit, that's all that's bad.
Yeah.
But you know, after you start giving the CFO you know, the right answer and everything is in sync, then, you know, CFOs are CFOs, they want more. And so then the next question is, well, how soon can I have it? And so now we're able to get into the system and actually start to analyze the process. And we don't have to worry about just keeping up. We can actually start to, you know, look at the analytics in terms of how long is this taking us? Are there ways to be able to get the cash sooner? You know, where are the, you know, where's the funnel in the system that's slowing everything down? And we can see pacing, we can see forecasting, you know, we can generate reports for people, and it's just, you know, so much more available to us now.
Yeah, well, the you know, again, as we talk about available technologies, emerging technologies, and the tools really required to compete, I think that, you know, again, certainly at the OIX, we pay great attention to that, and quite frankly, you know, some of the feedback we've gotten from your team at CBS has led to innovation specifically on our product, and, you know, we'll talk about that in a bit too. Our last polling question would be really interesting to hear from our attendees. If you were to think about, you know, your wish list, what, and I'm sorry we didn't give you the ability to give multiple choices here, but if you were to isolate and identify, you know, what would help your organization better from a technology standpoint? So we'll give this a second to as these responses are coming in.
I'm fine.
Okay. So, okay, interesting to see the distribution of, again, some of these answers. So, and this is quite frankly good to learn around analytics and reporting being most critical, and also around compliance and workflow, how that becomes, again, just is super important in terms of remaining compliant both with and managing both internal processes and or statutory or negotiated regulation, and also having the ability to access a centralized database of all available incentive programs, whereby industries can use, again, very simple filter and search queries to get a real estimate around the different incentives that they may be eligible for, and they might be many of them. And so as we come to a close, because we want to save time for the questions that have been coming in, you know, we certainly feel at the OIX that, and again, across any type of SaaS or enterprise platform that, once you can understand the nature of important data points, really once you can start to manage these credits in an effective way, well, then we can start to really leverage both existing and emerging technologies. And we talked about this, I think, a minute ago, where today, as an example already at the OIX, where we're taking, using elements of machine learning and predictive analytics by looking at all the historic data and helping our clients make forecasting predictions better, to monitor the pacing around, hey, we have a particular incentive that we're going into, and our systems and modern day systems are going to really help companies assess, well, if that is your case, here's a time frame that you can expect, here's industry best practices and some benchmarking around that particular program and this particular industry, for example, and help companies know what marks still need to hit, in order to make that happen. And then again, as these technologies, and again at the OIX, as we get excited about approaching them, in terms of how we can automate more and more of certain processes to help folks do their thing.
Yeah, that's absolutely true. We've loved all the innovation that we've seen, and even since we've been a subscriber, we found that you've been adding to it, and we have loved the new things that have been in there. It allows us to be able to manage things so well, even just little things that we weren't doing before. We have the capability to do now, much easier. Just, really one of the smartest things we've ever done.
Well, we're excited about that for sure. And so as we, start to think about, as we talk about, what should this all mean, Jonathan, to any of our attendees listening to? And we've seen the registration list, and there are folks at enormous organizations that are attending today. And how would you conclude and wrap some of this up in terms of the need for technology around this asset?
Yeah, I think one of the things that I wished is that we had gotten going earlier on this, because I think that there were years of heartache and difficulty as we were scaling up and dealing with bigger issues. So getting going early, I think, would have been a good idea. And I think that just understanding, because we have run across our share of people internally who were not big on having to learn a new system. They liked their spreadsheets. They were used to seeing a certain report come out, but we were able to show them that the system had the capability to literally spit out a report that looked exactly the same as the one that they were used to taking to the meeting, that they had each month. And so that was a big part.
Yeah.
Getting them sort of, realizing the capability. That was a big aspect of it. It was just a matter of sort of exploring and learning and teaching, so we can get there.
I'm going to move to the Q&A section, because we just got we got some questions, and one of them actually, Jonathan, just came in, pointed to you, where the question is, hey, we're just getting started with credits and incentives. What's your biggest learning as you got started around this?
Yeah, I think that a few of the things that stick out to me is that when you're first getting started, you realize what a complicated process it can be, because governments don't just give out money. You sign your name and they're going to give you millions of dollars. There's a pretty convoluted process that's oftentimes involved. And the thing that we found is that in the system we actually had the ability to put in steps. There's a part of the technology that allows you to put in the steps that are required. Those steps can actually be assigned to different people. And as those steps are accomplished, they can be checked off. And so a manager could go in and see where you are in the process of getting them. And then that way, and you can put in deadlines and have reminders come up. And then that way, as you're managing the process, you reduce the risk of missing something and not getting the credit, because that's, obviously that's not a good thing if a step is missed and the credit is lost for good because of some timing issue. So that's one of the things that I thought was very important.
Yeah, that's a great point. We were recently talking to a client that had a very large multi-year negotiated incentive package for relocating operations to a particular state. And it was a several $100 million package. And the individual who was tasked with managing that process kept the information on a spreadsheet. Well, that individual left the company. No one knew where the spreadsheet was. They missed a simple filing, and the jurisdiction canceled the incentive. Now, of course, they fought it. Took them months and months, I think somewhere between 8 months to 12 months to fight, and they got it reinstated. It cost them millions of dollars over something that, again, modern technology would have easily solved for.
Yeah.
We just got another question in, Jonathan, which you started to answer, but I'd love to take just a minute to get in deeper to it. The question that just came in was it difficult to get team members to adjust and adapt to a new system versus wanting to stick to the old way they were doing things? So you started to talk about that a minute ago, but I'd love to just respond to this the question that just came in from this attendee.
Yeah, there was a natural fear by some people to learn a new system, and
just to change the way they're doing it.
Just to change the way they're doing it, and many people felt like, well, I'm too busy to be able to take time to learn a new system, and so we worked through it. We slowly resolved it. I think a big part of it was showing them the capabilities. It's the fear of the unknown again. If they don't know what's in the system, they don't know what it can do. And
Yeah.
so in many cases, we help them to get over that by showing the capability of the system, and how the reality was that, by learning it, learning a few tools and the few things that they, needed to do in it, what capabilities it would unleash for them, and how much it would actually help them and save time in the long run.
Yeah, which dovetails well into the next question that just came in, which is, our company has a need and is interested in getting started with new technology. What is the process to learn a new tool and to get started? So those kind of questions kind of dovetail each other, and I'll begin by talking about how we address some of those things at the OIX. And what we've done is because we understand that companies have this data, they might have it again across multiple spreadsheets, or combination of Dropbox and spreadsheets and Outlook and other just databases. So what we've done is we've built tools for what we call bulk upload and immediate integration. We either do it again through our uploader tool or through our APIs. It'll just tap into a company system. So what might think is a daunting task is something that we handle very quickly. So companies get started, and we recognize that there's a get started and a move forward phase. In the get started phase, I just answered that in terms of how we quickly integrate your existing data. On a move forward basis, we often hear, and again, this dovetails into the last two questions, that companies think about, well, I have to enter new data into this system, again, whatever system they're using, and our response is often, well, you're entering that now in a spreadsheet, or you're entering it now in Outlook, or you're fraught with so many potential risks. So what was your experience just around integration, and again, whether it be any other type of system at CBS or the one we've been talking about?
Yeah, it was a big help having a lot of our data uploaded, as you mentioned, that you had the capability to do for us. But one of the other aspects of the system that we noticed was there are some built-in alerts when there's missing information in certain places. And so after the bulk upload, we were able to go through and see where there was information that was missing that we could then sort of, over time deal with and track, so that we had, full, sort of full integration of information in there, allowing us to run reports and giving us, full details on things. So that was a big help in being able to manage what was there and what wasn't, because that was a concern at first. Was, well, how do we know, what's in there, and we had the ability to be able to see that.
Yeah, one last question, and then we want to turn it back to Al at ACT. But there are more questions that have come in, so what we would like to do is we will include some of those questions along with answers when we post the file. That's the latest question that just came in, was asking about how do you folks see about evolving technology over the coming years, and specifically, is there a role for blockchain? And so, again, that's a much longer discussion, and we certainly see that there are applications such as the OIX, which is a management and compliance and reporting system that provides analytics and those things that blockchain is not really required around that. Our database solution solves for that, along with other technologies that we use. I think where we really see blockchain as a potential application in the future really is around the transactional aspect of credits and incentives, and more so at the government level, where government can leverage blockchain-enabled tax credits and incentives. And I believe that credits and incentives will be blockchain-enabled in the future. I think it's inevitable, but we'll certainly love to talk more about that in the future. With that, I'd love to turn it back to Jonathan. Thank you so much for participating, and I thought this was really wonderful. And we, at the OIX, very proud member of the ACT organization, find it wonderful, look forward every year to the annual conference and to not only presenting and the honor of presenting today at this webinar, but to attending the wonderful webinars and resources that ACT provides throughout the year. So with that, I'd like to turn it back to Al Bradley.
All right, thank you, Danny and Jonathan. As mentioned earlier, slides from today's webcast and replay will be sent to you in the next few days. After a few days, slides and the replay can also be found on the ACT website at www.taxact.org. Before we conclude, I would like to mention that our next ACT webinar will be held in December, so watch for your emails for more information. Registration for the webinar will open soon. Additionally, be sure to check the ACT website or watch for your email for more information about the upcoming webinars. Also, mark your calendars now so you don't miss our 2019 annual conference. It will be May 20th through the 22nd, and we're going back to Clearwater Beach, Florida. So I know that's a popular spot for a lot of ACT attendees. So we're going back to Clearwater, everyone. And registration for this conference will open in December. Also make sure to check our website for materials to help you achieve operational excellence in your tax department. We would like to thank everyone for attending, as well as the OIX for hosting and sponsoring the webcast. If you would like to join ACT or would like more information about ACT, please visit our website once again at www.taxact.org. Thank you again for attending. This webcast has now ended.